Okay, folks, welcome to the week ahead commentary for the 19th of November. So let's begin this week out first with observations. And I'm going to begin with a really clean chart, open, high, low, close of S&P 500 weekly view. And the market's challenged right now due to the fact that you have reached very close to the upper band. Let's annotate this. The upper band of the declining downtrend channel. And the markets are wondering, hey, are we going to roll over here? Do we even make it up to this upper band, or do we roll over? And that's what the market contends with. And I frankly think that they're climbing a wall of worry because earnings season, by and large, is in the rearview mirror. Yes, we do have a Fed meeting coming up. Yes, we do have a jobs report coming up. After that, it's clear blue skies. If, of course, the Federal Reserve doesn't surprise us. And I need to add that we do have FOMC minutes coming out this coming week. It's a market disruptor. But let's face it, the market was pretty shaken up by last Fed meeting. So, really, how much more shaken up is it going to be by the Fed minutes? We already kind of know what the Fed was thinking. So there's trepidation in the market. And a few of the charts that we're going to talk about in a few moments, such as Amazon, they showed real serious topping action on a weekly time frame last week. Same thing held true for Netflix, where we closed out a profit on that trade. So long story short, I believe that the path of least resistance, while yes, macro longer term is to the downside, lower highs, lower lows, I think that we still have a bit more fuel left in the tank to rally up to around 4,100 by at least the end of the year. And we could be there very, very soon. The question is really, do we break out from this downtrend channel? And that's the big question mark. Technical analysis is not about judging whether you're going to do. It's about, have you done? What are the probabilities? And given the current market environment right now, it doesn't look good. And the reason why I say that is that, as I mentioned on Thursday night Stock Charts Live, I warned about this chart here, weekly chart, 10-year yield, and we bounced off of the lower band of support. You remember on Thursday night, that last week's candlestick was red. We were down on the week, which is technically good for stocks, in particular technology stocks. But by the end of business on Friday, we had reversed on the week to close up fractionally, but up nonetheless. So this bull flag setup is alive and well, and definitely a threat to the market, in particular, again, technology stocks. Daily view. Daily time frame, we have a move up higher. Not a big, huge white candlestick. It's kind of an indecision candlestick, but it's up nonetheless. All right, so we're not going to rationalize all too much the quality of the move here. The reason why you're seeing pressure on the markets, even though we eked out a gain on Friday, is because traders are worried about rising yields. Long story short. Now, do we get a continuation move up higher on yields this coming week? Probably, because the TLT, the 20-year bond ETF, this is a weekly chart, and while it broke out last week, we saw some topping action. What this is reminiscent of, and any of you that have been with me for any length of time know that what I look for is, after you're in a real tailspin of a sell-off and you get a relief rally, well, we know that in general you're not going to get a V-shaped recovery and a rally up to new all-time highs. What we're looking for in technical analysis is a higher low. That is our signal to say, okay, we have a sufficient number of buyers below to outnumber the sellers who are still looking to distribute shares. So the question that I have is this: is this a W formation? Do we pull back, retest to 97.50, hold, and then break out and above this pivot point, which was the high of last week at, let's call it 101.27. Let's see if I'm right there. 101.45, close enough. So I suspect we're going to get some pressure here. We're probably going to get an upper band test on the 10-year yield, meaning we're going to rally up to 3.9 handle. As long as we can stay below 4, you could see a rally in equities, including technology stocks. Above 4%, technology stocks are probably going to underperform. Tips. I've been saying that this reminds me of a bear flag setup. I'm standing by that. On the week last week, we closed out the week with a bearish key reversal. Very bearish stuff. Look for a continuation move lower. Now, I'm not going to mention this on all these charts, but keep an eye on the line in blue, which is declining. The 50-period moving average weekly chart is rapidly approaching the 200-period moving average. On other charts, it's a lot worse than what we're seeing right now. I suspect that in the next few weeks, that when we do get this negative crossover, it's going to be a bloody week for whatever you're trading. So it's basically the death cross, however, on a weekly chart. Down volume last week was very light. The dollar, weekly view, managed to rally a clear reversal bar off of support. Our momentum indicators continue to weaken up. Let's go to a daily view. Daily chart, bullish key reversal bar on Friday. A bit of resistance above, up volume, decline. So I'm neutral here. I'm not sure whether or not we're going to move up higher or see a continuation breakout. The market's going to tell us. But obviously, if we do see a move up higher, we're going to avoid the emerging market trade or adding to gold stocks, silver stocks, because they're going to catch it on the chin until such time as we see resistance hit and we see topping action, and then we can go in and buy the dip on those names. But what was good about yesterday, I'll talk about this in a little while, Nugget, gold mining ETF, that rallied along with the dollar. That's good stuff. All right, so the euro reversal bar, this implies that we're probably going to get a pullback. Again, going back to the V-shaped recovery theory, we're probably going to get a pullback. We'll see whether or not we get a higher low, or do we break down to new lower lows. We don't know. The market's going to tell us. The same thing holds true for the Japanese yen, where we saw a reversal bar and we gave up support, which we had recaptured 2 weeks ago. So these bearish charts in a weekly time frame for the yen and euro are bullish for the dollar, therefore telling us, hey, be careful of adding to emerging markets and gold mining and silver mining stocks. The VIX eked out a gain on the week, over 2.5%. It was rejected at resistance, but what we do know, before we go to that daily chart, I was just about to say, let's go to the daily chart. But Stokes are very, very weak here, trading down below 50. We know that rallies tend to fade. What happened last week? A rally faded. Daily chart. So on Friday was a pretty bearish day. We broke down below support and closed there. So this reinforces what I believe is going to be a continuation rally on at least the S&P 500 and probably the trip Qs, the transports. They held support last week. They closed down, but all down weeks are not made equal. Why is that? Well, we retraced back down to a support level. We rallied to close back above another. That's the market saying, hey, you got support below. Now, we do need to modify this because we have targets that are not that far away. Right? We're right there. In fact, we had broken out the week prior to last and gave it up last week. The Dow Jones weekly view, we held the breakout point last week. So again, reinforcing that the breakout above weekly resistance is alive and well on the Dow Jones Industrial Average. We did a retrace back down to 33.5, held it, rallied. Yes, we closed lower, but by a basis point. Daily view. I'll tell you, these Dow stocks are looking pretty darn good. So we remain in an uptrend channel. I really need to modify the lower band. Let's do that now. And there we go. There's your higher low. I think that we press up higher this coming week. RSI looking good. The S&P 500 weekly view. I think we're heading up to 4,100. Do we break out? Probably. The Dow Jones is already broken out. The question is, do we hold it going into the new year? That's the big question. And the only one that can answer that question is the Federal Reserve. Daily view. We eked out a gain yesterday. Let's go to my other chart here. There we go. Better. The trend remains up. Volume was strong. Qs, weekly view. We held the breakout from the week prior to last. Down volume, light. We flashed a doji star formation, which is a sign of indecision. Daily view. Daily view, I think we head up higher. We eked out a gain on Friday. It wasn't a beautiful day by any stretch of the imagination, but it eked out an up day on light volume. And we need to expect this light volume environment from now until the end of the year. The only couple of days it's really going to be up volume, probably going to be the Fed meeting and jobs reports, maybe the FOMC minutes. The banks, they held support last week. I mentioned on Thursday night that I was pretty bullish on the banks. Let's go to a daily view. We're at resistance, volume, light. We'll look for some trades here. I'm probably not going to trade the XLF, but probably another vehicle, either an individual bank or we'll just use the FAS, which is a leveraged ETF, putting along in the banks. XLK, let's say it closed at resistance. This is the technology ETF. Light volume on the week, daily view. I think we go up higher. Stokes took a pause, probably going to flatten out and hook back up. The semis, weekly view. It looks like we had a breakout in time. What does that mean? It means that the week prior, we closed right at resistance. One might argue that we had a slight breakout. I'm not going to split hairs here. The fact of the matter is that we were so close to a resistance level that all we needed to do was really trade sideways this coming week, and we traded through the declining lower band correction, upper band of resistance. Daily view. We closed right at resistance, a bit of light volume on Friday, declining sequentially, not loving that, but a weekly breakout nonetheless. Let's talk a little bit about biotechs. A rough week. Did they break support? Let's do an update here. Technically, no. This is where the line should be. I was a lot more constructive on biotechs the week prior to last. I'm still loving weekly RSI. Stokes are a little bit iffy. Let's go to a daily view. Daily Stokes are weak, trading down below 50. We know that rallies tend to fade, so beware. We're holding support. I think that we shouldn't be looking to buy LABU here. If anything, selling out of the money puts until such time as these momentum indicators get resolved. Now, one thing I will point out is that these Stokes are giving us a pattern, and that pattern is higher lows. Question is, do we get the same this time around? The market's going to tell us. Consumer staples, a really strong week last week, a clear breakout above the upper band of resistance. You're going to have a bit more resistance up at 75, but these are looking really good. So we are seeing pockets of strength in the market. Volume is light. Daily view. Daily view, a nice breakout on Friday. Volume is light, though, so I'm a little bit suspect of the move. Moving on to the discretionary names, the exact opposite of consumer staples. I've been warning about this space for a while now. Remember that real wages are declining. So discretionary names need to pull back. I mean, people are wiped out in their credit card debt. And if they're not wiped out, these banks are going to tighten up on lines of credit. They're increasing interest rates, and that's going to hurt the discretionary names. Down volume light. Daily view. You look at this lower high on Stokes. We eked out a gain on Friday. Jury's out here. Fundamentally, I just don't like the space. Up volume was extremely light. One of the lightest days of the year on Friday. Energy, weekly view, a down week. I had mentioned about 2 weeks ago I was worried about topping action here, and we really began to see it last week. We had entered the apex of a ascending wedge formation. We broke it, rallied back, and now we are struggling even further. I think this weakens up even more. Momentum indicators going in the wrong direction now. Lower highs, lower lows, bad stuff. We did reverse to close off the lows of the session, but remember, the energy sector has been a leading space. However, on Friday, they lagged. They closed down while the overall market closed up. Down volume was fairly light on Friday. Oil broke support. We know that there's a tight correlation between energy stocks and oil. Now, I view this breakdown in oil to be very, very bullish for equities in general. The reason is that oil is inflationary. And you may say, oh, no, wait a minute, Bob. The Federal Reserve backs out energy out of the CPI, and they take a look at only the core number. Well, you have manufacturers that are in the core number, and they do get bleed-through costs from high energy prices into their cost to produce. If energy prices drop, their cost to produce drop as well, and you may see a little bit of pressure come off of the CPI report. So nice break here on oil, daily view. A really rough drop on Friday. They did rally off the lows, or it did rally off the lows. Volume was very high. So I suspect we're going to get lower lows on oil. Gasoline prices, they're following suit. No breakdown below support, but I think we're going to get it. Two positions. This is our emerging market trade, ex-China. It did close down on the week. after a really strong rally off of the September-October lows. So keep in mind that emerging markets trade inversely of the U.S. dollar. As we went over earlier, the dollar was strong, therefore emerging markets weak. No great shock. So let's wait for a pullback, and then we can add more here once we see some topping action on the dollar. Daily view. An up day on Friday, even with the dollar up. Very light volume, though, so word of caution. Gold, we saw a pullback, and we gave up support last week. 1750 is good support as well. We held that. Down volume rose. Daily chart, we broke support, 4 consecutive down days on declining sequential down volume. I think we're close to the end of this selling. A stronger dollar may continue it, but I suspect that we're near the lows here, especially with all the central bank buying. As for our position in the junior miners, they took a hit last week, down a little more than 3%. No real technical damage, except for the fact we had broken out above resistance and we failed to hold it this past week. So that's a breakout point failure. Our momentum indicators are still strong. They're rising and above 50. Daily view. Now, in a daily time frame, we had a good day on Friday, despite the stronger U.S. dollar. Volume is light, though, just like with emerging markets. NUGT, weekly view, a down week. But the low of the week, we never saw a 20 handle. And that's the first time we haven't seen a 20 handle on NUGT since the week of July the 5th. Actually, I need to amend that. We had a gap up here August the 8th. But before that, July the 5th. Stokes rising, RSI rising. Daily view. Nice close on Friday. Very light volume. The chart overall looks good. Silver took it on the chin. Bearish reversal bar on the week. Volume above average. Daily view. Bearish reversal bar on Friday. Expect more consolidation on silver. Stokes, you can see we have a double top rolling over here. So no rush to go buying more silver. The silver miners down over 3.75%, but they held support on the week. Very light volume. Daily view. Very similar chart as to silver. But we did close up, whereas silver closed down on Friday. Volume, very light. Gold money had a really, really good week last week. I think that we really need to entertain adding more here. This is our speculative penny stock. RSI, strong. Stokes, strong. Price, strong. Volume, weak. Daily view. Outside reversal bar on Friday. This looks like it wants to go up higher. Good volume on Friday. Really good volume. Our uranium play, weekly view, a down week. So a rough week for commodities. You saw it with oil. You're seeing it with precious metals. Daily view. We're trading down below the 50-day moving average again. Up day on Friday, light volume. As for our nat gas play, Boyle, leveraged ETF putting along of nat gas. We were up 14% on this trade last week. I opened up a new trade. We sold naked puts, 24 strike. We still have the covered calls above at, I believe, 55 strike. So we're generating cash flow off of the position. Daily view. Daily view, down day on Friday, but we did rally off the lows of the session. And we had broken out on the 16th. And we held the breakout on Friday. Good stuff. Volume rose, but you saw some accumulation here. Momentum indicators looking good. LNG, our liquefied natural gas play, an up week, 3.7%. Stokes, I don't like. Lower highs, lower lows. How was volume last week? Volume was just shy of average. Daily view. Good day on Friday. I think what we need to do here is just set a stop. Should we break the lower band of support here? But should we break out above 168, it's game on to the long side. And we'll be looking to add more. So the market's going to tell us what we're going to do here. All right, to our options positions. Coinbase, rough week last week. A total bear raid on Coinbase on Friday. Downgrades. You had Neil Kashkari, Fed governor, coming out bashing crypto. Article out of Barron's. Coinbase, blah, blah, Coinbase, blah, 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 blah. Bad news, bad news, bad news. To me, when I see something like that, it's like an organized attack on a company. In all probability, you're closer to a low than you are to anything else. So they took the shares down brutally on Friday. Saw a little bit of a rally back off the lows. Big volume on the week. Stokes still declining. Let's go to a daily chart. Now on a daily chart, we're holding the lower band of support, and we are still well off of the lows of May. This is a very volatile stock. Big volume on Friday to the downside. So if we do break this support level, I suspect that $40.83 is going to be the next price target. Let's check out the intraday chart. How do we close on Friday? 30-minute view. Not horrible. We held 45 for most of the afternoon. So I wouldn't go adding here. We sold naked puts. We rolled out of the trade. I went out, I think, another 40 days or so, I believe. And the reason for that is that when you're selling naked puts, we're at the 55 strike. So we generated cash flow of $3.40 or $3.45 the first go around. So our basis cost is 55 minus, we'll go with the lower number on premium, $3.40. Our basis cost is $51.60. Now we rolled out to the December 30 strike, collecting an additional premium of $4.38. So $51.60 minus 41.38 equals, I screwed that up, $4.38 equals, our basis cost is $47.22 if assigned to us right now. So we've generated significant premium. Now it's a waiting game. So technically we are long of Coinbase using naked puts. All right, we have a Strangle on Google. We're up on the trade. You saw some selling on the week, even though we were higher. We're profitable on the Strangle trade. Our deltas are below 10, so really we don't really care which direction Google trades, up, down, doesn't matter to us. We're just generating theta or time decay. As for Amazon, different animal here, where we're in a Strangle, and given the strength of Amazon the week prior to last, we had to convert that Strangle into a straddle at the 102 strike, which is currently above resistance. So right now, time decay is working for us. I hope that we trade within this trading range for another week or two. Then as we get into December, we rally up to that 102 strike. We close out the trade for a profit. So the goal right here, right now, is just to enjoy whatever time decay the market gives us. Let it rally up to 102. That'll balance out the price of the puts and the calls. At that 102 strike, we close them out and we move on to the next trade. And as I mentioned earlier about the declining moving averages, the 50 period is going to take out the 200 period moving average weekly time frame. Probably, if not this coming week, the following week. Daily chart. Stokes pausing here at 50. RSI, I think this is a higher low. I think we're going to move up higher, but that negative crossover of the moving average weekly time frame is going to cause a bit of a problem, at least in the short term. With that, folks, everybody have an awesome remainder of your weekend. I will talk to you on Sunday Night Futures Live. See you then.